everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. There's some questions here. Oh, sorry. All right, Stephen, thank you for letting me know that the sound is all right, and Reggie as well. All right, so we're going to begin, like I said, with an introduction to the company. And as many of you know, we are here since 2006 for nearly 2 decades. Oh, sorry, I wanted to get somewhere for the notes. There we are. As I was about to say, AvaTrade is a regulated company. We're here since 2006. We have 9 licenses worldwide. In case you got a question or a query along your journey, you can easily access our customer service right here at the bottom left to chat with us or on the WhatsApp. Or if you're using a different interface, you can simply send us a message to cs@avatrade.com. Now, what if you got a question regarding anything related to trading, as an example, like analysis or risk money management or something in your strategy that you would like to adjust, maybe the timing or anything like that. So for that, you can have a senior account manager assigned on your profile to give you full support with the process, which will give you answers to everything under the trading umbrella. Now, as I said, we will carry on. We will have the webinar using the web trader. What we're seeing now is just a second, AvaTrade's trading app. We are looking at the desktop version. This is the desktop version, but we also have it in the app, which I've just jotted down. You see, AvaTrade's trading app, which you can find on your store, on your device, on your phone. Now, on top of that, let me actually put it on top of that. We also have the regular platforms, the MetaTrader 4, MetaTrader 5. We have Ava options and Ava futures. And lastly, something that I would like to explain a little bit, the Ava Social. Okay, and the reason is what we can do using Ava Social. I'm not going to explain about any of those, by the way. The reason is they are self-explanatory. MT4 and MT5, whoever knows what they are. Ava options is a different concept. I think it's very innovative, and I'd recommend you all to check it out. Same apply for Ava futures, but it's a little bit different than what we're doing here today. Ava Social, what it allows you to do is it allows you to go and do copy trading, which means, for instance, if I am a trader, it doesn't matter at what level, really, because this could be useful for any levels, not only if I'm a beginner. And I want to go ahead and copy another trader, okay, for any reason, because I don't have the time, I don't have the knowledge. I just want to, I want it to run automatically. So this could be done in the app on Ava Social, simply by linking our account to another trader account. And as I've explained, the positions will run automatically, open and close. Now, how does, for instance, if I wanna copy another trader with a bigger balance than mine, because this is something naturally this can happen, right? Not everyone trading with the same balance. And what happens is, an example, if we have a balance of, let's say, what we have, in fact, yeah, $10,000, and trader B here is going to have, as an example, 25,000. Yeah, we're not going to go too crazy, just a little higher. Now, what will happen in this case is, for instance, he might take positions that I don't have the budget to go ahead with, right? So I might not get the same results. I might get very different results. In this case, what I can do, it's in the app, so unfortunately I can't show it to you, but what I can do in the app is I can go for lower lot size. Okay, I can go for the same strategy. I can still link my account, copy the strategy, but with a lower lot size. This means that it gives me the ability to first explore and see if this strategy is something that I want to maybe enjoy to its full extent. And secondly, it will give me the ability to survive things that I couldn't have because of the balance difference. Okay, I'm not gonna go too far with Ava Social, guys. If you have any questions regarding what I've said so far, feel free to let me know. But I want to carry on, so like I said, I'm gonna carry on with a web trader. We're gonna close that right now, fold it down, and what we're gonna do is primarily looking at the menus beginning from the top going down. Basically, in here, I'm gonna find my personal details. Okay. In here, my accounts, my payments, deposits, withdrawals, all of that. I can modify whatever I want in terms of my personal details, uploading documents, and all of that. Underneath is trade. This is where we are. And in here, we can trade. We can find different instruments, but we're gonna work mainly with this tab anyway, so I don't want to explain about it too much now. Underneath, we've got positions. We also have here the orders, if we would have any pending orders, but we'll learn what they are, we'll understand what they are and how to use them. I see people raising their hands. Guys, you don't have to do that because the question section is opened on my screen and I can see everything. You can just, whatever questions you want, you don't have to wait for my permission or anything like that. Just write anything and I'll see. Now, the underneath we've got history. If we would like, for instance, to determine, what range will be displayed in here very easily, in here as well, okay. Underneath we've got the signal section. If it looks like this and it doesn't look like that with the list on the top, this is because the screen is widened all the way up. Okay, and what we want is we want to click on the arrows here, to minimize and maximize the chart. Now, once we've done that, and we see here some lists, we've got here some lists of signals. We see, let's go from left to right. We see from left, we've got the signal, the name of the instrument, then we've got the buy type on the top. You see a bunch of buys, sell, buy, sell, buy. Then we've got stop loss, entry, take profit, view signal, and signal produced. Signal produced is here to show us when the signal was produced from the newest to the lowest, to the oldest. So the newest will be at the top, the oldest will be at the bottom. Of course, we all understand, since the market is alive and it goes up and down as time goes by, it does make a difference if I'm going to take a signal for NASDAQ that was just analyzed or if I'll take it 5 or 6 hours ago. Okay, it does, to my personal opinion, make a difference, and I'm sure you can find the logic in here. Now, how does this, so what exactly the signal is? What we're going to do is we're going to go ahead and, as if we would want to use the signal, and then we'll go back. And then we'll speak about what we see here outside. So we'll click here on view signal, and then we'll click on the arrows. And then what we're going to do is we will match the validity of the analysis we have in here to the chart we see. In here it says daily, so each day here, each candle here is a day. In here it says, let's see, at the top left, 1 M. Okay, so now each candle is 1 minute, but we want it to be 1 day. So we'll scroll down until we see 1D. We click here, and then each candle is a day. We can click on the column price and drag it down, and now it makes more sense. We can even switch to hours. Okay. Now, if we have it like this in a reasonable way, then we can see, okay, what's an area we want? Maybe we'll go with what's recommended in here. We'll go with the buy. Okay, we've got here some levels. Don't worry, I'll explain to you what it means. But for now, let's just go with a buy. Okay, what this means is we've got some numbers here on the take profit and the stop loss. Okay, some numbers, some possible profit, possible loss. All right. But what exactly does that mean? So you don't have to remember what I'm about to write, okay? This is the take profit, this is the stop loss. And what we saw here in the orders is there are things called pending orders, okay? So there is market execution, okay, which means buy or sell by market, now price. And we've got pending orders. What is pending orders? Execute when price hits, okay? Opening the position when the price reach, when it reaches the price. No, we'll keep it like this. I wanted to blend automatically in, but we're going to edit at the end. Opening the position when the price reaches, opening the position automatically. There we go. And now we've got take profit, closing the position automatically with a profit. And then we've got stop loss. So we're gonna just replace the loss. And then here, stop loss, okay? And now we understand the meaning of the signals. Okay, so we're gonna step outside. We're gonna step outside to where we were in here. And now we will understand a bit better what's going on here. So, okay, we've got here the values, we've got here the entry price, and then we've got a value where we intend to close it automatically with a profit, and in here where we intend to close it automatically with a loss. And this is prepared for us, okay? And if we click buy or view signal, okay, you see that this is already made for us. And if we click buy or sell, depending on those levels of support and resistance, we're gonna get the numbers. Okay, we'll get it automatically. That's how the signal works. We click buy or sell, and by itself, maybe we'll go with the sell this time. So we can as well, we can click on crude oil now. We again click here on the arrows. Oh, it's on 1 day already, perfect. And now we're gonna click on the sell scenario, and we are good. So basically, we would want to, just a second, I want to try and help you understand a bit better with, with those colors. Okay. So what I did here is basically I've made the stop loss red and the take profit green. Okay, so if it gets to the green line, we're gonna make $91, $91.50, and if it gets to the red line, we're gonna lose $28.50. Right now, 30. And this is with 0.15. We haven't learned exactly what that means, but what I want you guys to know is we can always change the lot size. We can go 0.1, we can maybe make it 1 lot as an example. Then the results changing accordingly as we increase or decrease the quantity of what we buy or sell. So as a conclusion, it's very easy to use the signals as I showed. Took me maybe 20 seconds to get there. We can even do it again. Let's go with FTSE. So we'll click in here, then we'll click in here, and then we'll click on the buy. Just to show you, we're not doing anything crazy. You see, we just clicked on the view signal, clicked again on the buy scenario, and that's it. We're here. So this is just a few seconds, and it works quite well. It's also important to know that the signals are not provided by AvaTrade, they are provided by the third-party company, the Trading Central, and this will be considered technical analysis. Okay, those support and resistance, what we see here, are basically edge points that we can identify on the chart. So my top lines will be resistance, my bottom lines will be support. We can acknowledge those to help understand a bit better where the instrument can potentially turn around. Now, it's, of course, it's not, nothing is too mathematical, and things can obviously change. As you can see, the trend are different, the candles are different, but we can think of those certain points as some hint where to potentially open a position or close a position, but we'll get there. I don't want to flood you too much, so we're just going to get there in a minute. But in the meantime, what I wanted you to know is just the general idea of this concept, support and resistance. But we'll explain a bit more about that. But in the meantime, what we're going to do to make things a bit more organized is we're going to push that down, maybe along with the what we wrote here. And in here, we'll simply put, what we'll write is technical analysis, which will be anything really that is that we can withdraw from the charts. So this will be averages, statistics, support and resistance, obviously, and indicators even. Okay, and this will be the how things are moving, right? Technical. And from the other end, what we have is fundamental analysis, which will be the other way around, which will be the news, articles, any kind of economic decisions, what else? Interest rate decisions, really anything, wars. Okay, so this will be the why. Now, why is this important? Because I get that a lot that people want to stick with the technical and don't want to, you know, watch the news and you know, and do all this research. And this is important. Why is this important? Because okay, as we carry on, I will explain and we'll understand what tools we can use. But the general idea here is I want to also know not just how things are fluctuative, but why they are fluctuative. And then I can combine them both and have a stronger analysis. Now, how can this be done? If we click here on the news section, we can have an idea of things like that exactly. So we got the pre-European market brief, the USD Japanese yen extend decline to 151.00 level. So on Tuesday, of course, I'm not going to read the whole thing, but as we can see, if we'll go and read what's happening here, and at the bottom, we'll even have specifically which instrument could be related to this article. Then we can combine this with what we see on the chart, and like I said, have a better analysis, not just technical or just fundamentals, but both. Now, if we'll, and we have the nice categories in here we can choose from. If we'll go further down, we have discovery, and in discovery we have market buzz. In market buzz, we can find more specific kind of news. We also have here various categories. And in these various categories, we've got stocks, cryptos, currencies, commodities, and indices. We don't have to look at it like this. We can make it like a table, like a list. We still see NVIDIA at the top, and it makes sense that it will be with the most mentions. If we'll click on NVIDIA, we'll get the specs, and we can see what's going on here. So if, for instance, I don't want to go through all of this, I don't have the free time for that, I can click on partnership, and only partnership will be selected, and then I can focus on what's important for me. And I can go to the chart, like I said, and I can, you know, do the proper analysis with the news that I've acquired. And just see how accessible and there is, to my opinion, there is really no reason not to do that. Everything is very, very accessible today. We can click here on the arrow to go back, select another instrument. This is also provided by the Trading Central. If we'll go down in the Globy icon all the way down to the economic calendar, we can have more governmental formal news. And we can see that okay, if the economic calendar doesn't display things correctly, it seems like things are not selected properly. You see, what's selected here is the 8. We're already at the 15th. So what I want to do is I want to catch up. I'll click on today, and then I will click on 2 weeks. Okay, now it's proper. I mean, if this would stay like this, it would just show me the results of what happened a week ago. I'm not interested in that, right? What we want is the new news and not the old news. Okay, so if we'll focus on what's happening here, we've got the 2 weeks selected. The high is also selected. We can click here on the reset to go back. Now everything is displayed. Now, for instance, I don't want to watch all this low, medium, and high. I want to maybe watch only the high impact, and maybe only, we'll click here on the flags to choose from the flags, and maybe we'll choose Japanese yen, and let's go with the Aussie and the US. Okay, so we've got those 3 selected: US, Australia, and Japan. We've got all the high impact event for the next 2 weeks and nothing else. Now, what I wanted to show you before I filtered that out is, if you notice, there was a red line that separated. Okay, so we'll select this again, then we'll do this the same way that it was. Okay, but we will go back only 1 day. This way it would make sense. So you see that it's still not showing us. There we go. So you see that there is this little segment in here with the font is a bit darker than the font that we have here. You see that the font here is white, and in here it's a bit more gray. Now, the reason that I'm showing you this is because those events, you see what it says here, the actual, this is the result. If we look at the structure of how the calendar is built, we've got here the day, the name of the day. We've got here some nice icons. We've got here the previous result, the forecast, which what we anticipate that will happen. Of course, there's no guarantee, and we've got the actual. This is to validate that it doesn't always happen as the forecast. Yeah, the forecast is something we can to give us a range and not a guaranteed number. And then we've got the result. So if we look down, we see that this red line separates, that area here. This is where we see the results. This is events that already took place, and those are events that didn't. Who cares about what happened? Okay, actually, it's very important, because sometimes what I want to do is I want to make a comparison between several series of results and not just to look at the new result. I always want to compare the previous result, okay, what's written here, to the new result. This is why it's important to look back and see the previous numbers. Okay, never mind. I don't want to go there too far, since this is still a webinar for beginners, but it was important for me to show you the various ways to find technical analysis like we saw in the signals, and as well fundamental analysis, the same way that we saw in the news section and on the market buzz, and lastly what we did now in the economic calendar, which we can find more formal things, and we can even search for a particular event if we want to find it in the calendar. And lastly, we can even book a specific event if we want by clicking on the tiny icon, the calendar icon, and then depending on which calendar we're using, we can book it into our calendar. All right, now I think we're ready to begin the second segment. Just give me a moment, guys, and we will begin. All right, so we are ready to begin the second part. Like I said, this will be the practical part, and in this part, we will open the chart and we will see how we can make a nice position. So we'll put the name of the instrument, we'll delete what we have in here. At the moment, it's not so useful. So how to find the instrument that we want to begin with? As we see, there are names, different names in here, and there are different categories, and there is this nice magnifying here which we can search if we would want a particular instrument that we wanted to see. And underneath we've got the categories in here. Maybe we'll go with commodities, maybe we'll go with agriculture, and maybe we'll go with corn. It has a signal, should be interesting. Clicking here on the two arrows to expand it up. Then we're going to go with the we'll change the time frame, clicking here on the 4 hours. Then we'll scroll down and change it to W1 to see weeks. So that's nice, very, very nice. Okay, so we've got here some analysis already on it. We'll click here and delete everything. Okay, there is a question here from Pilani. Hi, I'm new here, but I want to know if the signals showed on the screen, can I use them as is? Well, this is an excellent question. You can use the signals straight away. Always recommend to do your own analysis. All right, so Pilani, you asked the question if you can use the signals as it is, but as I always recommend, you can use them straight away, but I always recommend to do your own analysis also. The reason is, even if the signal is great, the timing of the signal and the rest of the things that we're going to learn also have an impact, since we don't always get 100%. Now, as we see, we've opened up corn. Corn seems, let's click here on the on the trend line, and then we'll click here again to see the values. We see that there was a change, a significant change of 22%. If we look at the time, let me just remind you, we're looking at weeks. And we can see that since the 7th of April until today, corn actually changed by, oh, sorry. We'll get rid of, there are too many lines. As you can see, almost 16%, right? Since it was lower, but it's less important for me at the moment. What I want to see is, I want to see how far down can corn possibly go. Okay, if we'll click here on the column price, click and drag down a little bit, we can see what we've learned, that we've got support at the bottom and resistance on the top. And as we can see at the moment, we are somewhere in the middle, not exactly in the middle, but somewhere in the middle, right? And we can see that although corn, the general trend seems bearish, going down, seems bearish, it still seems like corn is actually consolidating and not going down as significant. Because if we switch to days, we can see it a bit more clearly. Okay, see how the corn is staying at those levels. So how can this be useful? How can this be useful? We'll learn about it in a moment. Okay, but first I want to introduce you guys to the toolbar here and to see how I did what I did. So in here, this is actually a search bar. We can write whatever we want, click select it from the list. It's just important to remember that whatever you're selecting, let's suppose that we are on gold. So I click to buy or sell, and I've got the order entry to open. Now, if for instance, I want to go back to corn, I'll type corn, select it from the list. I still have gold here in the order entry, but I want to trade corn. So how can I correct the instrument that's displayed in here? I can just click buy or sell, and it will fix and display the correct instrument. Now, with core in mind, let's click here and scroll and drag, click and drag it down, and then we can zoom in. Now, how can I know? Sorry, how can I know? Oh, sorry, I was in the middle of explaining about the toolbar, and I got back to analysis. Let's just carry on a little bit. In here, we've got the time frames. We know from the signals, this is minutes, this is hours, days, weeks, and months. In here, we can change the shape of how the candles will be displayed, if it's candles or is a line. In here, we've got a crosshair. If we change from no crosshair to crosshair, we will get the numbers. So we're going to click here, select the second option. Now we get the numbers. Open, high, low, and close displayed here at the upper left with the date. And we can confirm that now each date is, each candle is 1 week difference. You see now we're on the 3rd, yeah? So this is the 3rd, this is the 10th, this is the 17th, 24th, okay? 7 weeks different, 7 days difference. Now, if we'll click in here, we can split the chart, make it multiple charts. So we can have more than one. We can have 2, 3, 4 even. Just look how nice. If we click in here, on indicators, we can end the indicator just by clicking and dragging it to the empty box, then click save. Just look how easy that is. Now, we're gonna do this anyway, so I don't think we should waste any time on it now. In here, we can find all those nice things, the lines, the trend line, the oval if we want to remember a specific area like we did. Okay, a rectangle, maybe you want to emphasize a certain area of profits and loss. So this is how we can do it. We can even change the color to green. Okay, and we're gonna keep it like this for now. And we're also going to write down the name of the instrument we're analyzing. So this will be corn. And I like to set myself a certain target, the list of ingredients that will help me construct the position with a bit more sense. So now we've got the target, time, movements, and units. And we'll add here an equation that will be movements times units equals sum. And if we go sum divided by movements, we'll get the units. Okay, keep it for now. Now, I still think that corn has the possibility to go down, even though it was in an uptrend, in a bullish trend. And we can see that the next support line. So those are both of those are support lines, yeah. So this one is more visible, the 367, and I think that it's a bit far down. Now, if we're looking to sell, as an example, so let's suppose we want to sell now. So we can click here on the execute when price hits. Let's read what it says. Execute when price hits, opening a position automatically when the price reach. Okay. So let's suppose that I wanted to get to 410 and then to sell. Then I'm going to click here on sell. Okay, we'll do it again. Yeah. Now it will sell it automatically. It will open a position with a sell as soon as it gets to here. And the next thing I want to do is I want to target 367 to be my take profit. So I'll click in here. Then I'll click in here. And I'll change it to 367. And I want to look at the other. I want to have the same length to the other side. So since this is $43 away, how can I know that? Let's do it together. We'll do it together. Okay, $43 away. We can even add this on top of the entry price, and then what we'll have is our stop loss. So we'll have 4 plus 43. Okay, and we'll change the lot size to be 0.01, and we are great. So we are $43 away on both cases. Now we'll also write it here. So this will be our entry. Okay, take profit and stop loss. Okay, so this is 50, sorry. Now, I want to know that those numbers that I've placed are realistic. I want to know that they are achievable and in a time frame that we can really expect to happen, and it's not going to take too long, because from what I see on the chart, it did take some time to get there. And not only that, the less time that it's been there, if I'll compare it statistically with what happened last time, was in August. It wasn't a day ago, it wasn't a week ago, it wasn't a month ago. Just look how far away it's passed since it's been there. Yeah, it's more than a year. Now, I am afraid, I don't want to wait too long until it will get there, right? I want it to happen in a reasonable time. So what I'm going to do is first I'll think about a number that I want to make, because even if it gets there, I'm going to make $43. No, thank you. What I really want to make is, let's go 700, okay? And the time, I don't want to wait a year. No way. Wait a year until it will get there again. Let's say maybe a week. I'm good with a week. 1 week, okay? Also, to hold this position for too long, it's not beneficial enough. If I'll make 700 in a week, I'm averaging 2,400 a month, right? 2,800 a month. So we also need to think about a reasonable time to hold it. Now, how can I validate? And those, in both cases, this is $43 away, right? So expected movement equals $43. Now, how can I validate that this is actually that this can happen? Because if I look at last week, if I'll compare the levels, the open, close, high, and lows from last week, right? We can find it here. If we point it, it's right here in the rectangle. So we can write the open is 418, close is 412. Then we've got the high, it's 424, and then low is 412. Now, if I'll compare those levels real quick, and I'm gonna compare the open with the low, with the close. So we've got $6, and then I'll compare the high with the low. Still, we're not near those $43. We're not even close. $6.12. It's less than half, right? So how can we validate this to really give us a more accurate number? Because obviously, if I'll just take one candle like we did now, it doesn't represent an average. Just represent one candle. Another way that this could be done is easily by applying an indicator called the average true range. So we'll click in here, put down AVE, click and drag it to the right. Now we can just select the number of candles we wish to withdraw our average from, and it will do it for us automatically. So let's go 10 weeks, sounds about right. We'll click here, and then we'll click on the, we'll change it to yellow maybe. Click in here, and then we've got 1, 2, 3, 4, 5, Sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Exactly, that's perfect. And we see that the numbers here is 14, not 40, not 43, 14. But I'm willing to compromise for 10. 14 seems a bit ambitious. We're going to do this, and then we're going to change from our entry by $10. So this will be 400. This will be 420. Now, what will happen is we will be $10 away. So this is 410. 20, and this will be 400. Sorry, this will be 400 since we are with a sell. Just to help emphasize what's going on here, when we buy something, we want the value to increase. When we sell something, we want the value to decrease. Therefore, the take profit will be in a lower price, and the stop loss will be in a higher price. So in this case, when we are $10 away, and we know that the ATR is actually 14, so we'll write it down. So we've got ATR equals 14,661. There is a question here from Josh. Why did you change from 43 to 10? Okay, Josh, this is a very good question. This is a very good question. Okay, so Josh, the reason is very simple. You see, the initial prices that I used from the support and resistance was discovered too far away, right? It was too far away. If I would keep it in here, I think that it might would have taken much more than a week, longer than a week. So what we did here is we applied the indicator to help us understand how much corn is moving per week, yeah? And then what we did is we reduced the length that we wanted initially to something more realistic, which makes more sense to us. Does it make more sense to you too, Josh? Very good, very good. I'm happy that it helped. Feel free to ask whatever you want, guys, anytime. Now, since we've made this adjustment and now it makes more sense, $10 is definitely a number that corn can move in a week because it's less than the average. Okay, and now what we want is to get to the number that we want in terms of the profits. And now, since we have only one unit, we only make $10. As we increase the number of units, we will make or lose more. How much do we need to make 700? Let's use the equation we've got in here. So the equation in here is sum. This is the 700. So we're going to go 700 divided by what? By the movement. So this is by 10 equals 70, right? So if we'll place in here 70, what do we get? We get the 700. Perfect. Now, we'll write it down. So 400, the take profit is getting us 700 profit. This one is getting us 700. Possible loss, possible profit. Perfect. Now we've got all of those things aligned for us, and we can finish the composition. Like I said, if there are any questions until this point, guys, feel free to let me know. Okay, this is just to show you guys. Okay, Pilani, you're also asking if you have any question, feel free to let me know. I'm going to quickly recap what we've done until this point so we can understand a bit better what happened here. Okay, so the first thing that we did was just to open corn. We didn't have all of those things, we just had corn. And then we saw that the trend that we saw is definitely bearish, right? We see bearish here, we see negative, it's going down, okay? Now, the next thing we did was to draw those lines. The line at the top, 505, and a line at the bottom, 367. This would represent our support and resistance. So this is our resistance, as I said on the top, and this is our support. And I thought maybe since we're going for a sell, I'll place the take profit here. Okay, this is entry. Okay. And I thought this could be a great place for the take profit. But I've discovered, as I've explained to Josh, that it might be too far away to happen in a week. I might want to do something to validate that this length is reasonable, since we're looking at weeks, each week. So I've looked at the previous candle. I've compared the numbers. It doesn't make sense because the last candle, last week, corn moved between $6 to $12. Okay, so in here in the average, we applied indicator called average true range, which is showing us that the average is actually 14.5. Okay. Is there additional charge for us if we use stop loss? No. Abdullahi, Abdul Fatah, you don't pay anything as an addition. You can use as pending orders as you want, as many as you want. We're not going to be charged for anything extra. And then what we did is we've modified the number that was initially here, okay, to the new take profit, which was now 400, okay? And we can switch. I'm switching 2 weeks just to show you. I'm not just to help you see what I'm doing here. And then instead of $43 away, we're just aiming for $10 away. Okay, and we have increased our lot size to match to the number that we wanted. Okay, I really hope, guys, that this makes sense. If it doesn't, please tell me. Okay, but I hope that it does. Now, as a result, we've got this nice composition with potentially making or losing 700, which is not bad, but this is still a ratio of 1 to 1. What if I want a ratio of 1 to 2 as an example? So since we use the initial equation to measure how many units we need, we can now know, using by this equation, how much we can make or lose. And if I want to compare the ratio that we have now, 700 and 700, this is based on what? This is based on having 70 bushels of corn over $10 difference. So how can I change one of those, the possible profit or possible loss, without affecting the other? Because if I'll reduce the quantity, I'm also reducing my potential profit or loss. The other thing that I can do is just to cut the stop loss length by half. And instead of having it 420, I can have it 415. And then I'm down by half, 350. So now this used to be 7% and 7%, but now that's going to be 3.5. How can I possibly know that? Because if I'll divide my possible loss by balance, this gives me the factor, times 100 equals percentage out of balance, right? So if we'll go 350 divided by 10,000, that's 0.03, right? Times 100, giving us 3.5%. Yeah? Okay. This way, by the way, I can check for any other instrument. It's not specifically for corn. Okay, in this way, I can also modify the difference between my ratio of my profit and loss. So the last thing that I'm gonna show you, I hope this is clear, by the way. If something is not clear, please tell me, and I'm happy to explain again. But the last thing that I want to ensure is that I do have the budget to take 70 units, since I've got 10,000. But like I see, the value for this is $28,000. So how can I know if I have the budget for that or not? It's very simple. We've got the price per unit. The price per unit at the moment is 411. And since we want to acquire 70 units, so we're going to take the price per unit times number of units, which is 70, and then we get the value. So the value is 28,778. So you don't have to do this by yourselves, guys, because the platform does this for you. Yeah. Now, we've got the leverage here. The leverage is actually a multiplier. What the leverage does is it multiplies. What does it multiply? Buying and selling. So we have the ability to buy or sell 10 times more thanks to the leverage. Okay, and with this logic, what we can do is we can divide the value by the leverage, and then what we get is the margin impact, which is the necessary amount to open the position. And it's not the value. It's not the value. It's this. Yeah. The recording, guys, is you can easily access the recording on our YouTube channel. Our YouTube channel, if you'll go to YouTube and you will search for AvaTrade, you're going to find all of the videos. I really hope that this one will be uploaded today, but there is no guarantees. Anyway, guys, our time is almost up. The last thing that I wanted to tell you guys is that the process that I'm showing you here today is something that you have to practice. You have to practice. It's nearly impossible to grasp this concept in the time that I'm teaching you, and I'm aware. This is why the webinar is weekly, okay? Because every week you can come to the webinar and you'll see a different instrument doing this exercise. But the point here is that you'll have an idea that is procedural with those guidelines, with the target time movements and units, which you can decide by yourself. Absolutely. All of the things that I wrote here are complete, without anything, any specific reason. I didn't do any thorough analysis with corn. I didn't check the news. Everything that I did here was simply to show you the process. So if you'll take it to the next step and you'll practice and you'll determine your own numbers and this becomes a habit, this will just make the process a little easier. That's all. Absolutely. Anytime. Thank you, Freddie. I hope that everyone else enjoyed as well. I'm sure that this was a bit swift for some people, but again, you have to understand that this is the content that we need to cover, and our time is limited. But like I said to Pilani and to everyone else, the recording is in our webinar. You can use use it and watch it and as many times as you want. Anyway, you're all welcome to join us for the next webinar. Until then, I wish you all best of luck, have a fruitful week, and have a good day.